Hey everyone, welcome back to Corporate Decoder. Today, Novo Nordisk Inc. 401k savings plan filed its annual report for 2025, and I'm spotting some interesting trends in how the plan is growing and investing your retirement money. Quick note, this is not financial advice, just my take on public filings for educational purposes. While retirement plans can seem dry, a look inside actually reveals a lot about a company's employee benefits and investment strategy, which can signal bigger things. So, let's dive into this filing from the Novo Nordisk Inc. 401k savings plan as of the 31st of December 2025. This report essentially gives us a snapshot of the retirement savings for employees of Novo Nordisk and some of its related companies. Think of it as a mini financial health check for the plan itself. First up, we're looking at the plan's net assets available for benefits. This is basically the total value of all the money in the retirement accounts. As of the 31st of December 2025, the plan had a huge $2.88 billion. That is a significant increase from about $2.54 billion at the end of 2024. This growth is a good sign, showing that investments are performing well and contributions are coming in. Looking at the assets, the biggest chunk by far is in mutual funds. By the end of 2025, these were valued at over $1.3 billion. That is up from about $1.06 billion the previous year. It tells us that a large portion of the plan's assets are diversified across many different companies and industries through these funds, which is generally a good strategy for long-term investing. Then we have the common stock of Novo Nordisk A itself. This was valued at about $237 million at the end of 2025, down from over $408 million in 2024. This is an interesting shift. It suggests that either employees are selling off some of their company stock, or the value of the stock decreased significantly, or perhaps a combination of both. It is important for employees to remember that having too much of your retirement tied up in a single company's stock can be risky. Another big piece of the pie is in common collective trusts, which are specialized investment funds. These are valued at over $1.18 billion in 2025, a solid jump from around $941 million in 2024. These trusts often offer diversified exposure, but can have different fee structures and investment strategies than typical mutual funds. And finally, money market funds, which are generally seen as a safer, stable investment, stand at about $97 million in 2025, a slight increase from nearly $93 million in 2024. This category typically holds short-term debt and is used for more conservative allocation or for holding cash. Now, something a bit more technical but still important. We see a dividend withholding tax receivable of over $8.4 million in 2025, up from about $7 million in 2024. This represents money that Novo Nordisk A has withheld as tax on dividends paid to the plan, but which the plan is expecting to get back. It shows that the plan holds a significant amount of Novo Nordisk stock in Denmark, where withholding taxes apply, and there is a process to reclaim those taxes. The fact that this receivable is growing suggests more dividends are being paid out or that the refund process is taking longer. We also have notes receivable from participants, which are essentially loans that employees have taken out against their retirement accounts. This stands at over $30 million in 2025, up from about $21.8 million in 2024. This increase might indicate that employees are increasingly using their retirement savings as a source of funds, possibly due to economic pressures or the availability of these loan options. It's a common feature in 401k plans, but employees should be cautious with taking loans as it can impact their long-term retirement goals. Moving on to how the plan's net assets change throughout the year. That is covered in the statements of changes. The plan saw healthy investment income in 2025, totaling over $211 million. This is up from about $203 million in 2024. This income comes from a few sources. The biggest driver here is the net appreciation in the fair value of investments, which means the investments grew in value by over $162 million in 2025. That is a solid gain, slightly down from over $164 million in 2024. This reflects the positive performance of the plan's various holdings. Other dividends, excluding those from Novo Nordisk A stock, also contributed significantly, bringing in over $36 million in 2025, up from about $27 million in 2024. This shows the diversification benefit from holding various mutual funds and trusts. And interest income on those participant loans added over $2.1 million in 2025, up from about $1.4 million in 2024. That is essentially the interest employees are paying back for borrowing from their own accounts. Contributions are another major source of growth for the plan. Total contributions in 2025 were over $246 million, a significant increase from about $213 million in 2024. Participant contributions alone reached over $162 million in 2025, up from $135 million in 2024. This shows employees are actively saving more for their retirement. Employer contributions also saw a nice boost, hitting nearly $58 million in 2025, up from about $38.5 million in 2024. This likely reflects profit sharing or matching contributions from Novo Nordisk Inc. and its affiliates, showing the company is investing in its employees' futures. One really interesting item here is a transfer in of over $86 million in 2025. According to Note 1, this was due to the acquisition of a manufacturing site which brought over assets from another retirement plan. This is a one-time event that significantly boosted the plan's assets for the year. It is important to see these kinds of notes because they explain unusual spikes in the financial statements. On the other side, we have deductions from the plan. The plan paid out over $203 million in benefits to participants in 2025, up from about $181 million in 2024. This means people are retiring, taking distributions, or making withdrawals from their accounts. This is a normal part of a mature retirement plan. Administrative expenses for the plan were about $1.15 million in 2025, up from $903,000 in 2024. While this is a relatively small number compared to the total assets, it is good to see it managed. These expenses cover things like record keeping and auditing. Now let's dig a bit deeper into the notes to understand what is going on. Note 1 gives us a description of the plan. It is a participant-directed defined contribution plan, meaning employees decide where their money is invested from a list of options. It covers employees of Novo Nordisk Inc. and several other affiliated companies. Employees can contribute a good portion of their salary, up to 50% before tax and 15% after tax. They can also make catch-up contributions if they're over 50, and there are even super catch-up contributions for those aged 60 to 64, up to $11,250. This indicates the plan is designed to encourage robust saving. Crucially, participants can choose their investments. The plan offers stock of Novo Nordisk A's, along with various mutual funds and trusts. A key detail here is that participants can't direct more than 20% of their future contributions into the Novo Nordisk stock fund. This is a protective measure to prevent employees from over-concentrating their retirement savings in the company's stock, which is a wise risk management strategy by the plan administrators. The company also contributes. For some eligible employees, there is a basic contribution of 8% of their compensation. For others, the company contribution goes to a separate money purchase plan. This shows a tiered approach to company contributions depending on the operating entity. Note 3 gets into fair value measurements, which is how they value the investments. Essentially, they're using market prices where available. Investments are categorized into level 1, level 2, and level 3 based on how reliable the valuation is. Level 1 uses unadjusted quoted prices from active markets, which is the most straightforward. Interestingly, the plan reports no investments in level 2 or level 3 categories for either 2024 or 2025. This means all reported investments are valued based on readily available quoted prices, which is excellent for transparency and valuation accuracy. This aligns with the heavy investment in mutual funds, common stock, and money market funds which have easily determinable market prices. Let's look at the fair value breakdown again. For mutual funds, common stock, and money market funds, the fair value is all in level 1. This adds up to over $1.65 billion in total investment assets in the fair value hierarchy. The remaining assets, which are primarily the common collective trust funds, are measured using net asset value, or NAV. These common collective trust funds are valued at $1.18 billion for 2025. The notes explain that they use the NAV of units of a bank collective trust, which is a common way to value these complex funds when direct market prices aren't available. The redemption frequency for these trusts is immediate, but there is a notice period that can range from 5 days to 12 months, indicating some potential liquidity considerations for larger withdrawals. Note 4 discusses the plan's income tax status. It confirms that the plan is qualified under Section 401R of the Internal Revenue Code, meaning it's generally exempt from federal income taxes. This is standard for well-structured retirement plans. This section also mentions withholding taxes on dividends paid by Novo Nordisk A's. For 2025, over $2.1 million was paid in withholding taxes, with a receivable of over $8.4 million outstanding. The plan is actively seeking refunds for these taxes, which is a good sign of diligent financial management. Note 5 highlights related party transactions. Since Novo Nordisk Inc. is the plan sponsor and administrator, and Novo Nordisk A is the ultimate parent company, transactions involving their stock are considered party-in-interest transactions. The plan also uses Charles Schwab Trust Company as its trustee and custodian. Fees paid to Charles Schwab for these services were over $596,000 in 2025, and advisory fees were an additional $555,000. These are normal fees for such services, but it is always good to note when the plan is dealing with affiliated entities. Note 6 is all about risks and uncertainties. It acknowledges that the plan's investments are exposed to various risks, including market and credit risks. Volatility in financial markets can impact the value of investments. This is a standard disclosure, but serves as a reminder that retirement savings are subject to market fluctuations. Given the plan's heavy allocation to mutual funds and common stock, this is a very relevant point. Finally, let's look at the schedule of assets. This provides a detailed list of what the plan holds. We see a wide array of mutual funds and common collective trusts listed here. For example, mutual funds like Allspring Special INTLSM CPI, American Funds UPAC R5E, and Columbia Dividend Income Funds are some of the largest holdings. The Schwab S&P 500 Index Fund is a substantial investment, valued at over $500 million. This shows a significant allocation to broad market exposure through an index fund. And of course, Novo Nordisk A's common stock, valued at over $237 million, reinforcing the earlier observation about its significant presence in the portfolio. The total investments listed here sum up to over $2.83 billion, matching the figures we saw earlier. Overall, the Novo Nordisk Inc. 401 savings plan appears to be a well-funded and diversified retirement vehicle for its participants. The growth in net assets, increased contributions from both employees and the employer, and a strong reliance on level 1 valued assets point to a healthy plan. However, the growing notes receivable from participants might suggest an increasing need for employees to tap into their savings, which is something to watch. The significant allocation to Novo Nordisk RES stock, while offering potential upside, also presents a concentration risk that participants should be aware of. The risk I am watching is the sustained increase in participant loans, as this can erode long-term retirement balances. What I'm actually looking for is more detail on the investment options within those collective trusts to understand their underlying risk and return profiles. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.